Welcome back, everyone, to We Are Cosmic. If you are new here, this is the place where we break down the most important developments happening in finance and cryptocurrency so that you can understand what is really going on behind the scenes. On this channel, we focus on facts, analysis, and long-term opportunities that many retail investors completely miss. Today, we have a very important update that every XRP holder and Flare supporter needs to pay close attention to because something major just happened in the market and most people still do not fully understand its impact. Recently, the XRP ledger achieved something that surprised a lot of analysts. XRP has officially overtaken Solana when it comes to its position in the real-world asset ecosystem. This is a significant shift because Solana has long been considered one of the fastest growing chains in the industry. But now the narrative is changing and new infrastructure is being built that could position XRP and Flare in a completely different league when it comes to real-world asset tokenization. The reason this development is so important is because the CEO of the Flare network, Hugo Fillion, recently revealed a major technological upgrade that could transform how assets operate on the XRP ecosystem. The upgrade, known as XLS85, introduces programmable escrow capabilities for tokenized assets. In simple terms, this means that assets issued on the XRP ledger can now be locked, controlled, and managed through programmable logic instead of just basic transactions. This might sound technical, but the implications are massive. Previously, escrow functionality on the XRP ledger was mainly limited to XRP itself. With this new capability, developers can now create escrow mechanisms for multiple tokens and assets, including tokenized real-world assets. When this system integrates with the Flare network, these assets gain access to an advanced compute layer that adds privacy, compliance, and smart contract functionality. This is where the bigger picture begins to appear. The XRP ledger by itself is extremely fast and efficient, but it was never designed to have the same level of programmability as networks like Solana. At the same time, many financial institutions require privacy and compliance layers before they can interact with blockchain technology. Flare is positioning itself as the bridge that connects these missing pieces. In other words, XRP provides the speed and settlement layer, while Flare provides the smart contract and computation layer. When these two systems work together, they create an environment where real-world assets can be tokenized, managed, and traded in a compliant and programmable way. That combination could become incredibly attractive for institutions looking to bring traditional financial assets onto blockchain networks. What makes this story even more interesting is how quickly the real-world asset market on the XRP ledger has grown. At the end of last year, the value of tokenized real-world assets on XRP was around $25 million. That number might sound small, but in just over a year, the ecosystem has grown significantly and has now reached a point where it can compete with other major blockchain platforms in this sector. Rapid development has been happening behind the scenes. New tools, integrations, and partnerships are being introduced almost every month, and the Flare ecosystem is becoming one of the key drivers of this expansion. Developers are building new infrastructure that allows assets from different blockchains to interact with each other in ways that were not possible before. Another important point mentioned by Hugo Fillion relates to how crypto tokens actually gain value over time. Many people believe that transaction fees alone will drive long-term price growth for blockchain tokens. But the reality is much more complicated. Even if the XRP ledger processed an enormous amount of global transactions, the amount of XRP burned through transaction fees would still be relatively small compared to the total supply. Because of this, networks must find additional ways to generate organic economic value for their tokens. This is where utility becomes critical. If a token is used for lending, collateral, liquidity provision, and decentralized finance applications, then the demand for that token increases naturally as the ecosystem grows. This is exactly the direction Flare appears to be moving toward. Instead of relying only on transaction fees, the network is creating an entire financial infrastructure where XRP and other assets can be used in lending markets, yield-generating strategies, and decentralized financial systems. That type of utility could potentially create far stronger demand over the long term. To understand why many analysts are becoming increasingly interested in the Flare ecosystem, we need to look at the bigger structure that is being built around XRP and decentralized finance. One of the biggest problems in the crypto market today is something called isolated liquidity. In simple terms, different blockchains operate like separate islands. Assets on one chain cannot easily interact with assets on another chain, and because of that, capital becomes fragmented across many different networks. This limits efficiency, reduces opportunities for investors, and slows down innovation across the entire market. Flare is trying to solve this exact problem by building what many people describe as a bridge layer for blockchain assets. Instead of forcing users to move their tokens to completely different ecosystems, Flare allows assets like XRP to be used inside decentralized finance while still maintaining strong security and interoperability. This creates a system where value can move freely between different financial environments without forcing users to sacrifice control of their assets. Some analysts have compared this stage of development to the early days of the internet. In the beginning, the real value was not necessarily in the websites themselves, but in the infrastructure that allowed data to move around the world. The cables, the servers, and the network protocols were the real foundation that made everything else possible. In the same way, Flare appears to be building the financial infrastructure layer that could connect different blockchain ecosystems together. This idea becomes even more interesting when you start looking at the different components of the Flare ecosystem. On one side of the system, you have what are known as F assets. These allow assets from other blockchains, including XRP, to be represented on the Flare network so they can interact with smart contracts and decentralized applications. On the other side, you have something called XRP Fi, which is essentially an ecosystem of financial tools built specifically for XRP holders. Inside this growing ecosystem, several projects and platforms are already beginning to take shape. Companies like Vivo Power, Upshift, and Clearstar Labs are building financial services and infrastructure tools that interact with the Flare network. Other platforms such as Firelight are working on yield opportunities and decentralized finance applications that allow users to earn returns on their crypto holdings. Firelight in particular has been gaining attention because its leadership team is actively working on new financial models for crypto-based yield generation. Beyond those projects, there are also important wallet integrations being developed. Wallet providers like Zaman are working with Flare to allow users to access decentralized finance features directly from their wallets. At the same time, major cloud infrastructure providers such as Google Cloud and GoldSky are supporting the ecosystem by providing reliable data and infrastructure services. This kind of institutional level infrastructure is critical if blockchain networks want to scale to global financial usage. The decentralized trading side of the ecosystem is also expanding quickly. Platforms like TrustSwap, Team Finance, Spectra, Enosis, Hyperliquid, Morpho, and Mystic are all connected to the broader DeFi landscape that Flare is helping to support. These platforms allow users to trade, lend, borrow, and manage assets in decentralized environments without relying on traditional financial institutions. At the same time, educational initiatives and developer programs are also playing an important role. Organizations like XRPL Commons are encouraging developers to build new applications within this ecosystem. The more developers who participate, the more tools and services will eventually become available for users. This developer growth is essential because strong ecosystems are built not just by technology, but by communities of builders who continuously create new products. Institutional involvement is another important piece of this puzzle. Custody providers such as BitGo and HexTrust are already working within the ecosystem to provide secure storage solutions for digital assets. These types of institutions are extremely important because large financial organizations require secure custody before they are willing to participate in blockchain markets. Exchanges such as Kraken also provide additional liquidity and market access for users who want to move assets between different platforms. One of the most interesting developments within this ecosystem involves a partnership with the financial platform Uphold. During a recent discussion between industry analysts and Uphold's leadership team, an announcement was made that could bring a completely new financial use case for XRP holders. According to the information shared in that discussion, XRP yield functionality powered through the Flare network is expected to go live around the middle of March. If this launch happens as expected, it could introduce an entirely new way for XRP holders to use their assets. Instead of simply holding XRP in a wallet and waiting for price appreciation, users may soon be able to generate yield directly through financial products connected to the Flare ecosystem. This could open the door for lending, borrowing, and other financial services that traditionally exist in the banking world. One of the most interesting developments coming out of the Flare ecosystem involves a new financial model that could completely change how crypto holders use their assets in everyday life. Traditionally, when someone wanted to use the value of their cryptocurrency, they had only one real option, which was to sell it if you owned Bitcoin, XRP, or any other digital asset and you wanted to spend that value, you had to convert it into fiat currency first. That process not only creates taxable events in many countries, but it also forces investors to give up their long-term positions in assets they believe will increase in value. The new system being introduced through the partnership between Flare and the financial platform Uphold aims to solve this problem. Instead of selling your crypto to access its value, you can use it as collateral. This concept is already common in traditional finance. Wealthy individuals often borrow against their assets instead of selling them. For example, someone who owns a large portfolio of stocks or bonds can use those holdings as collateral to take out loans, which allows them to access liquidity while still keeping ownership of their investments. Now, a similar concept is being introduced into the crypto world. According to the information shared during a recent interview between industry analyst Paul Barron and the chief product officer of Uphold, a new system is being prepared that will allow users to deposit their cryptocurrency as collateral directly within the Uphold platform. Once those assets are deposited, users will be able to unlock new financial tools without having to sell their crypto holdings. One of the most fascinating features of this system involves a credit card mechanism connected to the collateralized assets. The idea is simple but extremely powerful. A user deposits crypto into their Uphold account and uses it as collateral. Once that collateral is in place, the platform can issue a Visa credit card that is linked to the value of those assets. Every time the user makes a purchase with that card, the transaction effectively opens a small fixed-rate loan backed by the deposited crypto. To understand how this works in practice, imagine someone who holds Bitcoin or XRP and wants to purchase a new television that costs $1,000. Instead of selling their crypto to get that money, they simply use their Visa card connected to the Uphold platform. The purchase goes through like any normal credit card transaction, but behind the scenes, the platform creates a small loan secured by the crypto collateral that the user already deposited. After making the purchase, the user can choose how they want to repay that loan. They might pay it back over several months, similar to a standard financing plan. The important point is that the user never had to sell their crypto. Their assets remain in their account, still exposed to potential price appreciation, while they continue using their purchasing power in the real world. This type of financial tool has the potential to attract a lot of attention from long-term crypto investors. Many people in the digital asset space believe strongly in the long-term value of their holdings. They do not want to sell their assets, but they still want to access liquidity when necessary. Systems like this create a bridge between the crypto economy and the traditional financial system. Another interesting factor is the amount of XRP already held within the Uphold ecosystem. Current estimates suggest that the platform holds somewhere between 1.5 billion and 1.7 billion XRP across its network. That represents a very large pool of liquidity that could eventually participate in these new financial products once the system goes live. If a significant portion of those XRP holders begin using their assets as collateral, it could create an entirely new layer of financial activity around the token. Instead of XRP simply sitting in wallets waiting for price movements, it could start functioning as a productive financial asset within lending markets, credit systems, and decentralized finance platforms. This is one of the key ideas behind the broader XRP-Fi concept that the Flare ecosystem is trying to build. The goal is to transform XRP from a simple transaction token into a versatile financial instrument that can participate in many different types of financial activities. When assets become more useful within an ecosystem, demand for those assets can increase naturally because more people need them to access those services. At the same time, it is important for investors to approach these opportunities with proper research and caution. While the technology being built is extremely promising, decentralized finance systems can also introduce new risks that users need to understand before participating. Smart contracts, lending mechanisms, and collateralized loans all require careful management. Another important development that deserves attention is how adoption is slowly beginning to grow among long-term XRP holders. For many years, one of the biggest criticisms of the XRP community was that most holders simply stored their tokens and rarely interacted with decentralized finance. Unlike other blockchain ecosystems where users constantly participate in lending, staking, or liquidity pools, XRP investors traditionally preferred to keep their assets in cold storage or simple wallets. This behavior made sense for several reasons. First, XRP was primarily designed as a fast settlement asset for payments rather than a complex smart contract platform. Second, many decentralized finance platforms required users to move their assets to unfamiliar ecosystems, which introduced additional risks. When investors have held their assets for several years, they are naturally cautious about transferring them to unknown protocols. However, the Flare ecosystem is now attempting to change that behavior by creating tools that allow XRP holders to participate in decentralized finance while still maintaining control over their assets. One of the key tools in this system is something known as FXRP. FXRP is essentially a representation of XRP that can be used within the Flare network for decentralized finance activities while still being backed one-to-one by real XRP on the XRP ledger. Recent data from the ecosystem shows that adoption is beginning to grow faster than many people expected. In the very first week after the XRP-Fi integration through the Zaman wallet went live, approximately 18.4 million FXRP tokens were minted. That number alone shows that there is real interest from the community to explore new financial opportunities connected to XRP. Even more interesting is the number of users participating in this system. Around 5,400 XRP holders interacted with FXRP for the first time during this early phase. Many of these participants are believed to be long-term investors who have held XRP for 2 or 3 years without actively participating in decentralized finance before. This shift in behavior could become extremely important for the long-term development of the ecosystem. Another statistic reveals something very interesting about the type of investors participating. Around 98% of FXRP users currently have more than $12,000 in active decentralized finance positions. This suggests that many of the early adopters are serious investors rather than casual traders. When larger holders begin experimenting with new financial tools, it often signals growing confidence in the underlying technology. One of the reasons this adoption is becoming possible is because the user experience is improving significantly. In the past, using decentralized finance required multiple complicated steps. A user might need to create a new wallet, move their assets to another blockchain, connect to a decentralized application, and then manage several layers of security. For many people, that process felt too risky or too complicated. The new systems being developed with Flare aim to simplify that experience. Instead of forcing users to move their XRP away from secure wallets, many of these tools allow them to interact with decentralized finance while still maintaining self-custody of their assets. In other words, users remain in control of their private keys and funds while accessing financial opportunities built on top of the Flare network. This type of design dramatically reduces the psychological barrier that prevented many XRP holders from experimenting with decentralized finance. When investors know their assets remain secure in their own wallets, they are much more willing to explore new opportunities such as earning yield or providing liquidity. Behind the scenes, a significant amount of technology is working to make this process possible. The Flare developer ecosystem recently introduced smart account functionality that creates a direct connection between the XRP ledger and the Flare network. These smart accounts allow XRP addresses to control wallets and interact with smart contracts on Flare while maintaining a clear link to the original XRP ledger account. Two important components help make this system work. The first is a master account controller which manages the interaction between the XRP ledger address and the smart contract environment on Flare. The second component is the personal account contract, which acts as the smart contract representation of the user's XRP account within the Flare ecosystem. While these systems may sound complex from a technical perspective, their main goal is very simple. They are designed to create a seamless bridge between the XRP ledger and the world of smart contracts. Once this bridge is established, XRP holders gain access to a much larger financial ecosystem without needing to abandon the security and reliability of the XRP ledger. These developments are particularly important because they show how blockchain ecosystems are evolving beyond simple payment networks. They are becoming full financial infrastructures capable of supporting lending, borrowing, yield generation, and other advanced financial services. Now that we have covered the basics of FXRP adoption and the growing ecosystem, it's time to dig deeper into how the Flare network keeps everything secure and non-custodial. Security is one of the biggest concerns in decentralized finance, especially when large amounts of crypto are being used as collateral or integrated into smart contract systems. Users want confidence that their assets won't be lost due to hacks, errors, or volatility, and Flare has implemented systems designed specifically to address those concerns. When someone deposits XRP through a connected wallet like Zaman, they are not transferring it to a third-party custodian. Instead, their XRP remains fully on the XRP ledger while being represented as FXRP on the Flare network. This is possible because of the Flare Data Connector, or FDC. The FDC acts like a constant observer of the XRP ledger, tracking the instructions and transactions sent by users. It ensures that every FXRP token issued on Flare is backed one-to-one by actual XRP on the original ledger. This means that for every FXRP token in circulation, there is a corresponding XRP securely locked and verifiable. The bridging mechanism is actually quite elegant. When a user sends a transaction on the XRP ledger, they encode their intent, what they want to do on the Flare network. The FDC monitors this transaction, verifies its validity, and then communicates it to the Flare smart contract system. Only after all validations are complete is the action executed on Flare. This ensures that transactions are accurate, secure, and synchronized with the original XRP ledger account. Even in cases of extreme market volatility or potential liquidation events, the system is designed to protect users' assets and maintain proper collateralization. This technical foundation is crucial because it allows investors to feel confident using FXRP and other Flare-enabled assets in decentralized finance applications. Yield generation, lending, borrowing, and other financial tools can now operate without requiring users to move their original assets, which reduces risk and makes participation much more accessible. The system also preserves the one-to-one backing of FXRP with XRP, ensuring that redemption is always possible, and that users' funds are never exposed to unnecessary counterparty risk. These mechanisms also tie directly into the growth potential for the Flare ecosystem. As more XRP holders mint FXRP and use it for decentralized finance, the amount of Flare being locked up as collateral naturally increases. This creates a kind of supply shock, where the circulating supply of Flare decreases because it is being used to back active FXRP. Economically, this can lead to higher demand for Flare tokens, which has important implications for price appreciation over time. Essentially, the more FXRP that exists and is actively used, the more Flare is locked in the system, creating a cycle that benefits both the network and token holders. From a developer's perspective, Flare is also opening the door for more experimentation. Smart contracts and account abstraction allow developers to create new financial products that leverage this secure, non-custodial framework. They can design lending platforms, yield-generating strategies, or liquidity pools with the assurance that assets are backed one-to-one and interactions between Flare and the XRP ledger are fully traceable and verifiable. This creates a powerful environment for innovation because developers can focus on building products rather than worrying about basic security or bridging issues. Institutional adoption is another factor that cannot be ignored. By combining smart accounts, escrow functionality, and secure bridging, Flare positions itself as a platform capable of supporting institutional workflows. Large financial institutions require strong compliance and privacy layers before moving assets onto blockchain networks. Flare addresses these requirements by offering privacy-compliant computation and multi-purpose escrow, making it attractive not only to retail investors, but also to larger players looking to enter the market. Overall, what we are seeing is a system that is gradually transforming XRP from a simple payment token into a fully productive financial asset. The combination of FXRP, secure bridging, smart contracts, and growing adoption means that XRP holders can now participate in yield opportunities and financial applications that were previously impossible without selling their assets. This shift is significant because it changes how investors think about the utility of their crypto holdings and introduces new layers of financial activity within the ecosystem. As we move toward the conclusion of this breakdown, it's important to understand the broader implications of the Flare ecosystem and how long-term investors might benefit from this emerging infrastructure. The integration of FXRP, secure smart accounts, and decentralized finance tools is not just a technical upgrade. It represents a fundamental shift in how XRP can function in the financial world. By allowing assets to remain non-custodial while generating yield, the network is effectively creating a bridge between traditional financial concepts and the modern crypto economy. One of the most exciting aspects is the potential for yield generation. Investors no longer need to choose between holding XRP for long-term appreciation and participating in financial activities that generate income. By minting FXRP and using it in decentralized finance applications on Flare, Holders can earn interest, provide liquidity, and access lending platforms all without ever selling their original assets. This is a huge leap forward compared to traditional crypto investment strategies, where yield was often limited to staking or high-risk lending platforms. Adoption metrics indicate that this system is gaining traction quickly. Within just a few weeks of the XRP Fi integration, FXRP minting has already surpassed 122 million tokens, reflecting growing participation from both long-term holders and new users. As more holders realize they can use their XRP productively without relinquishing ownership, adoption is likely to accelerate. This growth has a compounding effect. As more FXRP is minted and used, more Flare tokens are locked as collateral, creating a scarcity effect that can drive increased demand and long-term network stability.